Stocks, while in focus, not as much Zing. Let me bring on board Gurmeet Chadha, Managing Partner and CIO, Complete Circle, joining us on this first day of the month, trading day of the month, if I can call it. Gurmeet, good having you. I want to first start with a view with regard to the auto pack. How's the performance been in your opinion, and how would you play it?
So, if you see there is clear leadership getting established, both in two-wheelers and four-wheelers. If you see the TVS numbers, clearly doing well. In fact, now in EV, their market share is now almost 25%. So iQube really picking up well. We also had a good, in terms of land preparation, the sowing for the paddies also broke, which augurs well for the two-wheeler rural sales as well. And if you see the GDP data, rural and agri is showing some early green shoots, fingers crossed. Similarly, in four-wheelers, Mahindra & Mahindra continues to increase the gap between the number three, number four. I think the SUV market share would already be more than 25%. I think by the end of the quarter, the numbers will come. And I think tractor numbers continue to do very well, which I'm more happy from a broader recovery rather than M&M in particular. And the stock has been a little subdued if you see for last 6 odd months. It did correct when the auto tariff issues were at its peak. And now, it's recovered a little bit, but still 10% off from all-time highs of, I think, 33, 3400 if my memory is right. So all cylinders firing, SUVs, tractors, farm equipments, good capital, prudent capital allocation. Also the fact that there will be some restructuring in the business at some point of time, the way all verticals are. So similarly, I think even in Tata Motors could be a restructuring candidate. And this year there are a lot of launches due. They haven't had a lot of new launches, both in in the hybrid EV and as well as the normal the core engine space. So I think I'm constructive on Tata Motors more on in terms of a rebound happening at some time, and M&M more from a core portfolio allocation perspective.
And what's the impact of a Tesla coming in on some of these names, Gurmeet, in your opinion?
I just think that if you see the top 10 best-selling cars in India, the only two cars which are above 20 lakhs is Scorpio and Creta, right? So I personally think that Tesla is more competing with the upper end, which is about, less than 5% of the market and not much impact there. So, I don't see much impact on M&M or Tata Motors for that matter. The entry model won't start anything below 35, 40, whatever be the deal happen. So I don't see much issue there. It's more going to be at the broad SUV end and the broader end, which is the luxury sedan, not as much at the majority end of the market.
And Gurmeet, between OEM and Auto Ank, are there better opportunities on the Auto Ank side of things? A FEM, for example, is flying in trade today. So just trying to get your view.
So we had Uno Minda and Sandhar in our portfolio. Sandhar is a small cap. Uno Minda has been there for almost 7, 8 years in the portfolio. It's been a very good wealth creator, and they have more products coming up this year. Sandhar is good. Largely, the mix is more still towards two-wheelers, but they are diversifying, moving from the core, which is castings, to locks. They've also applied for the smart lock in terms of the beta version of the lock that could potentially add another revenue stream if things pick up. We are also looking at some of the plays which are more Europe centric from a valuation perspective. I think there's a lot of negativity there, but in general we've been little away. I'm a little neutral right now on this space, considering that there is slowdown, especially markets exposed to Europe, and you will see some slowdown even in US as well. So it's good to be more on companies where domestic sales are part of are the majority part of it.
Got it. Gurmeet, good afternoon. Are you of the opinion that weakness in metals, for example, is an opportunity, or is it difficult to call right now, considering that the newest tariff order has just been issued?
No, so I think it's an opportunity, but it's a tactical opportunity. So, for example, if you bought Tata Steel in 2009 and till 2019, you would have made no money. So I think you got to be selective with names, especially avoid names which are very leveraged, go for names like Tata Steel in ferrous space and Hindalco in non-ferrous. Tata Steel obviously now generating net cash, Hindalco for the proper integrated way we have. I'm a little more positive on precious metals actually in the portfolio, and I'm actually increasing weightage to gold and silver. My sense is that the dollar hegemony, and maybe it's a strong call. I think gradually we will see that getting challenged this decade. You know, it happens when it happens over a long period. It's not going to turn overnight. Also, you have no credible currency to replace the dollar right now. You can't do euro, you can't do yen, you can't do yuan, of course. So I think the precious metals will keep taking over. So constructive on gold, and now we are adding silver, both from a precious metal perspective as well as industrial usage perspective. And we are looking at some opportunities in copper and aluminum, but those are more tactical in nature, and not part of the core portfolio.
Okay, so you're not quite buying into metal stocks as much as you would buy into precious commodities themselves. Okay, that point is well noted. The other one, Gurmeet, there just seems to be every conflict that is coming in, sad as it may be, and it shouldn't happen, but is giving the rise to the usage of the drone ecosystem, right? Drones, anti-drones, defense, etc. There are maybe 3 or 4 players doing that, but I would presume that everybody is getting into this air defense space too. Are you constructive? Select areas of defense even now, and do the drone companies fit in that bill?
Yes, unfortunately, a lot of good news is in the price. Look at the way some of the companies have done well. For example, Solar, for example, which is not really a drone company. It is defense is still 20%, 25% of the book. But within defense, you have Nagastra, which is drone. You have micro rockets, which is form of an anti-drone, and you have Pinaka rocket, right, which is the large part. And I think this number could be 40-50% over the next 4 or 5 years. But some of the near-term good news in terms of orders coming in is in the price. The share is already at an all-time high. It was 8,000 levels in February when we last spoke. Zen, for example, is more simulators and anti-drone system. That also, if you see from almost 1100, my memory is right, almost 7 days of 5% circuit. Right, and today there is some bit of weakness. I think the opportunity, in my view, is the near-term announcement. So there were two near-term defense announcements which can come. One is the emergency purchase, which is 40,000 crores, which the government is likely to, which has announced but hasn't really been notified yet. A large part of that would be loitering ammunitions and missiles. So loitering ammunition, as the name suggests, is like suicide drones. It can travel hundreds of kilometers and stay in air for longer and then strike coordinating with satellite images. It's a very high advanced form of warfare. So that could be one. You can have the likes of data patterns, Bharat Electronics, bit of Zen, bit of Solar in that space. And then you have Project Kusha, which is coming in, which is the air defense surveillance system, which is an ambitious 40,000 crore project where you want to basically safeguard the country if there is a three-way attack tomorrow. And a large part of it is, let's say, through drones and advanced, weapons being used. And last is marine, where you have other players coming in. So I think you have to break it down in terms of value chain. But, unfortunately, I think 80-90% of the good news is in the price. So near term, you may not have too much movement. If it happens, it might not be a bad idea to actually trim and take some profits home.
Gurmeet, where would you play in the value chain with regard to power? Because that's the big theme which is playing out. You've seen some bit of re-rating on counters as well. Where do you find most value at this point?
We actually are very overweight energy, and if you see us, even in COVID, two sectors which had the least cyclicality was power and telecom. So we like Tata Power. I think I think the stock is right now most reasonable. They are into generation, distribution, completely integrated company, solar panel play, EV charging play, 30 times trailing, 22, 24 times forward. One of the more reasonable power company in the private space. We have power grid because the transmission capex, somehow, numbers continue to disappoint at least for last 2 quarters. But the most reasonably valued 60% share in transmission. And transmission has been one bottleneck for India. Not now, it's been there for a while. And we are more bullish on power equipments now. And that is where you have some smaller companies coming in insulators, in transformers, and other spaces. One space we recently got into is a company called Hindrat, which makes transformers for locomotives, which is a traction transformer and an aux transformer. Earlier, they were only making one. Now they are making both. So the combined unit is roughly about 2.5 crore per unit, if you take combination. And they're trying to do some acquisition also overseas. So now they have another facility getting commercialized, which could mean that the EPS can double. They will do slightly better as the new facility comes in June, July. So that's another small cap play we have. And then we are looking at more names in power equipment space. So we will have about 5 odd stocks as far as the energy value chain is concerned in the portfolio.
Okay, so interesting. Thanks, Gurmeet, so much for coming in, discussing some ideas and giving us all of those views and thoughts. We'll let you go on that note. But what we're going to do also